The lower the number, the smaller the buy-sell imbalance that's required to give you, and here you have an incredible number of buy-sell areas of buy-sell imbalance. And but what I really want you to see more than anything is the principle, and that is that buy-sell imbalances occur everywhere in the market, and that you have to have an indicator that does, one, a multi-time frame assessment in order to make these zones extremely powerful and relevant. Just using the time frame of your trading chart is never going to make it. And when the buyers here are used up, it has to stop. And number two, there are multiple areas and multiple zones. And what you have to decide is on the threshold. Now, I like 150. I believe that creates the most relevant areas of buying and selling. Now, I don't see it at all here. Let me find out why. I've got a 150 sensitivity on a 6-minute, and you can see you just get much fewer lines. And in between here and here, there is no relevant areas of buy-sell imbalance that in any way is going to impede your ability to trade. And essentially, if you want to take a trade off of support, which is where there's, now here you have dual levels on 150 sensitivity, which is a low sensitivity. You go long here, you're still long. And now you're out. Now this trade was just not successful. When it came right back to support, that was the trade. But you didn't lose anything because you entered off of this line and you closed off of it. Now you garnered nice profit, but in the market today on the NQ, which was straight down, and this might have been last night, you're just not going to, what you're looking to do is get to the next area of resistance, and you just don't make it. But what did you lose on the trade? Nothing. Because as soon as you just get a couple of ticks on the trade, you're going to move your stop right to the support area that you entered. Because once it comes back to there, you're out. So your risk is extremely low, and your potential reward is going to be in ticks from this area of support to this area of resistance, 61 points on the NASDAQ, which is a gigantic trade. Now you're just not going to get that today. But let's go back. I mean, now short, and this is not today, this is yesterday. This is on 10/17. And if you take this short, you go right to support. Now on just a few ticks of risk, you make 61 points. That's 600. That's 240 ticks on that trade on a 2-minute chart. I mean, that's an unbelievable risk to reward. Now, how you trade it is totally up to you. I'm just giving you ideas. I just want to show you its configurability, It's what it does and how it creates its assessment. It's a multi-time frame assessment, and you have to set it. If you change the speed of your trading chart, you have to change this. And it's very easy to do. If you're trading a 2-minute, you're going to multiply it by 3 and go to a 6-minute. Let's take a look at, say, on the NASDAQ, let's look at a 13 range. Now here's a 13 range. Let me take off all the drawing tools. But remember, when you change to a 13 range, you have to go into the indicator and change it from a 6-minute, and you change it to range, and you go to the next higher fib number. Now 13, next higher fib number is 21 range, and put it in. And here are now your new relevant areas of support and resistance based on a 13 range multi-time frame assessment. And you can see right here how well it works. I mean, price comes up. Sorry that I blew that, but you can see it really easily. Price comes up off of support, comes back to support, and retesting support is real common. And then it goes straight up. And let's see how far up it goes. There's the first area of resistance. Now it ends the day. So, I mean, that's the end of the trading session. So from the time you take the trade until the close of the session, you make a really nice move. And really, the key here is this: make 41 points. I mean, a 41-point trade is just an outstanding trade. And again, the risk to reward here is so small. You're risking maybe 1.5 on a move through support to make as many as 40 or 50 points. So, but I don't want to give, again, I don't want to give you a methodology. I just want to show you the relevance of the levels of support and resistance. And I'm just going to, mention them one more time. And then I'm going to open it up to questions. And I'll show you the offer, and then you can ask any questions. And that is, one, it's a multi-time frame assessment, which makes it exceedingly powerful. So anytime you change what's here, now if you're trading tick, or you're trading range, or you're trading Renko, or you're trading Unirenko, you're just going to use the next higher. Well, if you're trading tick, let's say you're trading a 377 tick, you're going to use your next higher fib number, a 610 tick. If you're trading a 13 range, you're going to put your next higher fib number, a 21 range. If you're trading time, you're going to multiply it. Trading a 3-minute, the input is 9 minutes. You always want this to be able to do a 2 higher time frame analysis and project that onto your trading chart. And that's what makes this so powerful. And the other thing is that you can change the size of the buy-sell imbalance simply by changing the sensitivity indicator. I recommend you keep it at 150. I mean, that's my personal recommendation. The lower the number, the lower the threshold for the buy-sell imbalance, and the more lines you will get. And it really depends on your trading methodology, whether you want to trade with more specificity, which is more lines, and a lower sensitivity number, which actually increases the sensitivity. It's just inverse. Or you want, because if you go even lower, and you put this, I showed you before, at 25, the buy-sell imbalance required is going to be very low. And so you're going to get multiple areas. And the thing is, though, they become less relevant because the number of buyers here is smaller and the number of sellers here is smaller. So what you want are only the most relevant areas. And I believe that they occur when the sensitivity is at 150, although you can look for more minor areas of buy, sell, and balance, and use those in whatever method you trade, to either trade the break, take the trade off of it. But one thing that you will never do, and I recommend this strongly, is trade into it. If you do, you can see right now, if these were not on your chart before, and your methodology gave you a long trade into this sell zone, it's almost, the likelihood of this failing is remarkably high. And if you have a buy or sell right into here, the likelihood of being successful is extremely low. And there may have been some trades that set up on your charts perfectly and they blow up on you. And you say to yourself, there's nothing that I see on my chart that allowed me to determine why that trade didn't succeed. Well, this is likely the reason. I mean, these are not hidden on your chart. They just haven't been calculated and they haven't been shown to you. And now that you see them, you'll make absolutely sure you don't trade into them. And if you're going to do any, if you want to use them, you trade off of them. So let me show you the offer. That's really it. I mean, this is not complicated. Everybody knows what a buy, sell, imbalance is. It's based on the market delta of a candle, but you need to do a multi-time frame assessment because the market delta is a very tricky number, and you can get a down candle on a positive delta, an up candle on a negative delta. You have to calculate it on a multi-time frame basis. And remember, the buy, sell, imbalance is not based on executed buy trades. It's based on the number of sellers sitting on the dome at any given specific area. So it's a complicated calculation, but it's got to be done on a multi-time frame basis to make it relevant. And I can show you one more instrument. If you want, I'll show you a stock. And why don't I just add my stock data feed real quickly. And I'll just pick a stock at random. And then if you want to see any stocks, I'll be happy to show them to you. Let me just add my kinetic data feed. It's connecting. That's connected. Okay. And now we can put it in a stock. Hang on one second. I got one error here. Okay. That's fine. All right. Let's, I don't know. Let's pick something. You know what? We can do this. Go to here. See, it's just giving me an error on my Forex templates because it's not loading them. Let's go to stocks. And why don't we pick something that's got a lot of volatility? I'm probably overlooking this here. Let's go to, you know what? Let's look at electronic arts. I think that's ERTS. I don't see it here. I may have the ticker wrong. Let me just find. So you give me a big list, and I just go crazy on it. I just want something with a lot of volatility that isn't $1,000 stock. That's all. We'll look at Netflix. I mean, it's not Mr. Cheapo. Now we're not going to trade that on a 13 range, but we'll let it load. We're going to change the 13 range to a 5-minute. And then we have to change, remember, the settings in the indicator. Now we're not trading a range anymore. We're trading a minute chart. So we go to minutes. And since we're trading a 5-minute, we're going to put a 15-minute here. So it's going to look at the 15 and the 45-minute chart. And it's going to put up those areas based on here they come. See, there are just not many. I mean, here was one that got broken. There are just very few. Oh, here, let me scale this. Just very few. Just no imbalances. I mean, if they're not there, they're not there. Now, let's just take a look and see what happens if we lower the sensitivity. We have one there, and we have one there. And the one here, this buy zone here, is never taken out. The buyers remain here throughout this period of time, and they turn the market. And you know what? It's a buy and hold on Netflix for the entire day. Up it goes. It's still there in the morning, but it's breached and broken. And this is 9:50 at the open. And then we may not get another one for the rest of the day. Let's just keep looking. I mean, when they're not there, you're not going to get them. So, I mean, that's Netflix. There's only one on a 5-minute. And it does turn the market. Just because price has breached it, and that's the one thing that's unique about this, doesn't mean these buyers have all been absorbed. They're still there because this is a multi-time frame analysis. And on the multi-time frame analysis, it tells you that these buyers are still there. So you have to be very careful about taking a short trade. You're still looking for a long trade because this area of support is still there on a multi-time frame basis, even though price is breached on your trading chart. And this is a good example of it right here. It's how if you go long off of it, you're going to get a move up. And this is very choppy. Right here. Now, all you're looking to do here is increase the specificity of your trading. If you had an entry into it, you'd never take it. And very briefly, you had an area of sell imbalance right here, and you could have traded the break. It would have come back, but then it would have done the same thing. Do nothing but run all day to the upside. And this remained intact for the whole day. We can go, we'll go back. See, I don't have any more data to load. I'll load one more stock. And then I'll show you the offer, and we can, and I'll answer any questions. Yeah, let's just look at the NASDAQ 100 here. I just want something that's going to move and not just sit around and do nothing. Because if it doesn't do much, you're not going to see anything. And I don't know what's really, I don't want to look at it, like a micro cap. or a really small stock. I want to look at it. We'll look at Apple. I don't think Apple's has done a whole lot of moving. We'll look at it. You know what? Let's look at it on a higher chart, a faster chart. I put it on a 2-second. I hope it doesn't freeze it. Let's look at it on a 2-minute. All right, there's the 2-minute. And what we've got to do is change the indicator from 2 minutes, from 15 to 6. Now, here's the areas of resistance. Now, they are there, you can see, when price comes up. They're not created after the fact. This is created after the fact. This is here as price rises into it. And you're not going to trade it. And here's your perfect short. All the way down. Now let's see where the first zone is of support. It's all the way down there. Now it just doesn't make it, but you get yourself a really nice move. Point move on Apple. If you're trading an option, is you get $1.70 on a move on a 2-minute move down. If you're trading an at the money option, you've got yourself a nice trade. But again, I'm not talking about methodology. What I'm simply trying to show you is you're not trading long into it. If it breaks it, comes back and tests it, and it's still there, you trade off of it. Don't trade into it. Don't trade into this. These really define the bounds that make it easy to trade. This is not the value area high, value area low. It has nothing to do with that. These are buy-sell imbalances. This is not one standard deviation off the mean. It has nothing to do with this. It is a completely different calculation. And what makes it obvious is that it has a sensitivity, and you have to change the time frame that you're trading. So let me show you the offer. It's a terrific indicator. We're going to put it on our platform. We have an early version of it up now, and the final version of it will go up on Monday. And let me show you our offer. If you'd like to purchase it. Now it'll go on NT7 or NT8, and either one. And let me just bring the slide over. And just start from the beginning. Oops. Change the display. Now, it's normally $299, which is what we're going to set it on the website. We're going to sell it. It's $129. And the first 10 orders will get 1 month in 2 live training rooms. Now this week in the live trading room, I did really, really well. Now I trade a very small number of contracts, and I'm going to show you what I did. Now there's very few people that are going to show you their back end, and I don't show very many people my rear end either. But we made $1,287. And that's on a very small number of contracts. If you traded a 3-lot or a 4-lot or a 5-lot, you'd be up $3,000, $4,000, $5,000. I keep it very small because I want everybody to be able to follow how I do. And I only took 3 losers all week. So you're going to be in my training room, and you're going to be in our evening training room for the whole month. And you get the indicator for $129 lifetime. We'll install it, and we'll do all the work that you need. And if you need any additional work on how to set the sensitivity based on what you trade, what the higher time frames are, they're really simple. If it's time, you multiply by 3. If it's tick, or range or anything else. You just go one higher fib number. It's very simple. So if you're one of the first 10, you get a whole month in both trading rooms. So the offer ends on 10/20, which is Sunday night. If you have any questions, it's 786-732-4656. So I'll leave that up and let me answer any questions that you have. Okay, hey guys. Hey from New Zealand. Hey, how you doing? Okay, John. Hey, Heinz. How you doing? I spend most of the time, Heinz, on the NQ. Hey, Mike. Sure. Mike asked me to show it on a minute-based chart, and I'll be happy to do that. Let me move this off, and let's put it on a minute. Why don't we go back to a future only because they're so volatile? Well, on a minute, yeah, we can trade a future on a minute chart. It's no big deal. Let's go to 1 minute on the NQ, and then we have to reset the indicator. We got to go to 3 minutes, and we're gonna, in the futures, we're gonna change the sensitivity to 150. And here they come. So let's take a look right here. Why don't we start when the market opens? So the market opens, price comes right up to resistance. There's a big sell zone here. Sell it all the way down to support, which is the buy zone. Now it breaks this buy zone, and you can sell it. You're not gonna get a big move, but you're not gonna get a loser. It moves in your direction. Now you wait till price comes right back to support, and you take it up. It comes back to support. If you didn't lock in any profit, you lost nothing. But on the break of support, and this is a clean break, and you have to wait for this to stop tracing, which occurs right about here, you've got yourself a really nice short trade. Now, a minute's fast. These are too close together to trade. Again, you can take this break. You're not going to lose anything. And here's your buy area, and up you go. So there's two major things. One I also want to mention. The risk to reward is incredibly good. I mean, you only have, on stocks or futures, you only have to set a stop maybe 6 ticks or so below this zone. If it comes back and grabs you, you're out of the trade. And your potential reward, you're talking about 20 or 30 points. So let's say you got into the trade right here, and I'm just picking an arbitrary area. Now, here's the end of day. That's 47 points. So if you trade off the support, and remember, support's still present here. So really, you're really going to stay in this trade. It may go against you a little bit, but as long as that support, as long as there's still an abundance of buyers here, they're going to hold the market up. They're not going to let go of it until they're taken out, and they're never taken out, not on a multi-time frame basis, and eventually they turn the market up. So your risk is really very small compared to your reward, and that's a 1 minute. I think I showed a 2 minute. I'll be happy to do that too. I mean, it's not going to change really much. This is really going to work on any time frame. And if we go to a 2 minute, let me take out all of the drawing objects. And all we have to do here on the indicator Let's go to 6 minutes. And you've got pretty similar areas. There's your open up to resistance. There's your trade down to support. You're out. Now, right here, I'm telling you, is enough to end your day. I mean, this is a gigantic move. Whoops, I put the wrong line in. But I mean, I don't know how much you're looking to make a day if you're trading futures. But this is a 36-point move. If I got 36 points on 2 contracts, I mean, I'm lousy at calculating, but that's a lot of money. That's about a $700 trade, or I mean, it's a lot more. If we make it 35 and multiply it by 4, 5 times 4 is 20. That's 140 ticks. Times 2 is 280 ticks. Times 5, that's a $1,500 trade right there. Now, this is not going to go anywhere. But remember, you're not going to lose much on this trade if you go long. But once this stops, you can go short. And the short move is way bigger than the loss you took here. Here, you just can't trade it. But here again, you got a perfect trade off support. And look at the move. I mean, it's gigantic. 44 points. The important thing is these areas turn price. And when price breaks them, they're going to run. So you're going to trade off of them or trade a break. And because they're very, very relevant areas. And you can see at the open, you got yourself a great trade. And it really, the time is really irrelevant. I mean, you're going to pick your own time frame. It's going to create for you your own relevant areas. I recommend a sensitivity of 150. You don't want too many buy-sell zones, nor too few. 150 gives you just a really perfect number. Okay, hold on. I'll go back to Heinz. I don't think you missed anything, Damien. Oh, you're at 120. Listen, you may have to listen to the replay, but basically these are sell zones. The supply demand right here. You've got a tremendous amount of supply. So when you come up here, price is unlikely to break it. Here, you don't. You have a tremendous amount of demand. Or did I make that? Or did I mess that up? Here's where there's an overabundance of buyers. Here's where there's an overabundance of sellers. This is resistance. This is support. And you just don't. I mean, what I make sure I never do is trade into it. And what I do is I trade the break. I will send out. We will be sending out a recording. Okay, you want to see Google? I'll be happy to put that in there. You got a Google request. No, we're not going to trade Google on a 2-minute. Just excuse me for 1 second. I'm sorry. That was just my son. So let's change Google to a 5-minute. And let's go in and change the indicator, because now we've got to go to a 15-minute. Now, the thing I'm going to do on Google also is I'm going to add more data. We're only going back 5 days on Google. Why don't we go back 20 days? So let it load. It's done. And let's see. There's the cell zone right there. Now that was created. What we want to do is we want to look at areas that were already there at the time that the trade occurred. Let's see. There's just not many because Google is so expensive. I don't know, a 5-minute maybe too. Hold on, let me rescale it. Okay, here's a support area on Google. And that's a gap. Here's a support area on Google. Huge move up. Goes right through this cell zone, right through it. Let me go backwards. There aren't that many buy, sell imbalances because it's such an expensive stock and there's so much volume. You just don't get many zones. You saw you got one really nice one. Now, just for the heck of it, let's look at a 10-minute. It may be a little bit too long, but let's take a look. Now let me change the indicator to a 30-minute. And on stocks, I'm going to change the sensitivity to 100. Okay. Okay. I mean, this is just nothing. Right at the it's right at the open. Just not much on Google because of its price. Now, let me take this out. Now here's an area. You'll notice that this sell zone was never broken. There was always an overabundance of sellers here, even as price penetrated. So you're going to take that first move down and take it short. Now, this is a multi-day move, but you've got nothing holding up the trade. Now, I can't tell you where to get out because I'm not going to give you a trade methodology, but here is an area of resistance that's never taken out. And even though price, that's what makes this different than any other indicator, because on a multi-time frame basis, those overabundance of sellers remain. So you're not going to buy this break because they're still here. What you're going to do is wait for the move down and sell it. So, I mean, it really doesn't make any difference what instrument you're trading. And I'm not, curve fitting this. I mean, here's where you have the same thing right here. And this was here before the trade evolved. Now it trades right into an area of support. So I would have been careful with that trade. Now, I want to just show you one other thing. You can also control the thickness. Like on Google, you can make it thicker. And if you want, you can make it even thicker. Now, because the width is measured in ticks or cents, so that obviously if you're trading and I'll show you what happens when you make it really thick. Because we had a default setting of 10, and the 10 setting, see how it gives you this box? Because what we wanted to do is make sure that you understand that this is not a discrete line, and to realize that this is an area. And it's an area where there's an overabundance of sellers. And you have to take it out before you can go long. As long as it stays in, you look for those sellers to drag price down. See if there are any other questions. Okay, Damien. What I'll do is I'll look at GC, and I'll look at it on an 8 range. I better get this out of there. It's going to lock. Let me go to futures. Have a look at GC. Now I've got to change the indicator from a minute to range and go one higher, 13, and put this at 150. Now to see how, now I've got to change the thickness of the zone back to 1. And here we go. Now that zone was there already. It was created on this candle. And you can see what happened on gold. It traded right into it. And up it went. Now I don't know where the area of resistance is. It's all the way up here. And that's it for the day. But you can see what happened if you bought off the support. Maximum amount you could have made on the trade, took this candle up to here, was that's 74 ticks. That's a very, very big move. Be really happy with a 74 tick trade. The key again is you don't trade into it, you trade off of it. And we can look and see if we got any others. Now that was just created here. So if we approach it, depends how close you want to come, you're going to sell the market off into it. And you get a really nice move down. Now it's still falling. And it falls all the way into support. I mean, this is a gigantic trade. And again, the risk to reward here is amazingly good. And this trade, if you took it all the way down to here, you got 108 ticks. It's not a bad trade. So I'm telling you, it does not matter what instrument you trade, what time frame you use, or what market. I don't have a Forex feed, but it works just as well on Forex. And you can set the time frame. I recommend the sensitivity on stocks is 100, 150 on Forex and futures, and it's going to give you very, very powerful areas of support and resistance. And you can see the multi-time frame nature of the calculation, because sometimes price will go through it, and it still sits there. Now let me rescale it. I'm just looking for any other areas, and there just aren't any. Here's one right here, which you would, I mean, but you've got support here. So what you do is you trade the break of support, and down you go. I mean, that's how I trade it. When I get a break, but the break doesn't come till here, when this zone is gone. and you take it and you trade it short. Now, price does turn, and I can't tell you exactly why, and we're not always going to know. Let's see if there's anything that, nope. But you have to decide on your own ATM. I mean, we scale it, but there's nothing over here. So it works. It doesn't make any difference what you're looking at. It works on anything. Okay, Ray, this is my last one. I could do the SPY, but that's a good one, Ray. I like the SPY as an example. I'll just put it in. Because a lot of people trade the SPY. Now, we're not going to trade it on an 8 range. I don't think it happened. Hang on one sec. Sorry. Just let it load the 8 range, and then I'll change it. Why don't we change it to a, I'm just going to change it to a 3-minute. I mean, I don't really know what time frame, what speed you'd like to look at, but then we have to change the indicator. We have to change it to minutes, and we're going to put it on a 9. And on stocks, well, no, yeah, we're going to change the sensitivity to 100. And here we go. So why don't let's flip it all the way over to here. Now here's support. It's never taken out. Now your trade-off support here is a nice move up. Now you get a gap up. There's nothing, I mean, there's no buy-sell imbalances here. I mean, the SPY is just moving. Let's see if there are any. Nope, there just aren't any. Those were the only ones. On a 3-minute, that was it. Just that one. Just this one. That was it. Nothing else. I mean, if they're not there, they're not there. That's all I can tell you. Alan, I'll do EA, but that's my last one. I'll do electronic arts. I like electronic arts, by the way. I think they're very bullish on the stock. Now, we're staying with the 3-minute, so I don't have to change the indicator settings. And if we look at electronic arts, now that was not there when this came down. So there's nothing to trade off of. I mean, I don't want to, it's got to be present at the time that price hits it, or obviously it's not going to be relevant. See, there's your support right there. Now, you get this very tiny buy imbalance. And price just slices through it and takes it out. And you get a huge move up on EA. Now, where you take it out is really up to you. And then you don't get another area like that again. Go all the way across until we get, now that was there already. I mean, that wasn't there at the time. It was created here. And it's too far away. We would want price to come up and challenge it before I would not consider this any area to trade based on this indicator. But you're going to get one more signal, I think, right here. And there's your long, right off the support. I mean, very specific. If there's no buy-sell imbalance on the 100 sensitivity, you're not going to get anything. And you don't want anything. If there is, and you trade off of it, up it goes. So I'm not going to show you any more instruments because because you're wearing me out, and you can have I've shown you so many on so many different time frames. Believe me, it's not going to behave any differently if you trade advanced micro devices or you trade any of the Dow stocks with low volatility. It's always going to be the same. The key though that I consider is the number of losers it prevents you from taking. It gives you winners, but more importantly, if for some reason your trade methodology calls for a short, you're going to stand aside. And on a red zone, if it calls for a long, you're not going to take it long. That's really the key. It increases the specificity of your trading. And those trades that blow up on you when you just don't know why, I'm telling you, this is the reason. It's because you're in a supply, you're in a buy-sell imbalance, and the trade turns on a dime. And if you look at this trade, boom and boom. I mean, these buyers just came right in and were waiting and just blew this stock up. And this was already here. You know, this one I can use because it was created on this candle. This candle came back into it and up it went. It wasn't created after the fact. This was there when this candle came down. So, Chris, really, it's just not going to be available for TradeStation in the foreseeable future. I'm sorry. Oh, listen, they'll work on a daily, they'll work on an hourly. It does not matter. Listen, these are totally time frame independent. They really are. I mean, I would have to load about 100 days of data to give you the buy-sell zones on a daily chart. But it does not matter. I mean, when they occur, the indicator will assess them and show them to you. And it does not matter. I mean, I looked at a 2-minute, a 3-minute, a 5-minute, a 10-minute, an 8 range, a 13 range, a 2-unit Renko, a 4-unit Renko. Higher time frames are just as good. I mean, you can trade it on an hourly bar, 4-hourly bar, it doesn't matter. As long as you make sure you set this right. If you're trading it daily, you're going to go to daily here, and you're going to change this to 3 minutes, 3, which are 3 days, and you'd probably want to increase the width a little bit because that's a long, you want probably to 10 to make that line thicker. That's all. And keep the sensitivity at 100. That's all. And it'll work fine. And listen, if it wasn't time frame independent, then it doesn't work. I mean, if it only works on certain time frames and not others, if it only works on certain markets and not other markets, it's like all the indicators we have. They're time frame independent and they're market independent. And if they're not, then there's something wrong with them. Thank you, guys. Thank you. You can use them with cryptos, but this is not going to work on a crypto platform. I don't know that NinjaTrader projects cryptos. But listen, you're going to get buy-sell imbalances on cryptos too. So I don't know, honestly, I don't know how you could use it on cryptos. Right now, I mean, I could be wrong, but I don't think you can get, can you get cryptocurrencies, Rory, on Ninja? You can? Oh, well, you can get cryptos on Ninja. So if you want to trade off of Ninja, if you want to use the support, the buy-sell imbalances on Ninja and trade it on your crypto platform, you can. Now we can download a demo of NinjaTrader, but you're going to need to to buy a cryptocurrency data feed, unfortunately, to power this. But it will work on it if you do it that way. Can you trade cryptos? So do you need to do anything? Okay, if you're trading Coinbase, I don't know what crypto platform you're using. Coinbase connects to Ninja. So if that's the platform you're trading the cryptos off of, Sergio, using an API that Coinbase developed, will power your Ninja Trader and actually do the cryptocurrency charting right off the chart. So you can use it for cryptocurrencies. And if you would, and through the API, you can actually trade off of the Ninja Trader platform. We'll do all the configuration for you though. So you don't have to worry about setup or anything like that. We'll do it for you. Okay, Mark. Hey, Ronald. There'll be a recording. It isn't yet, Robert. We'll be adding it. Mark writes, how do we know what inputs to use on a 2-minute YMRNQ chart or a stock daily chart? Well, listen, you have to decide the time frame. If you're trading, I mean, you're asking me about what speed, but if you're trading a 2-minute, Mark, the inputs are a 6-minute on the indicator. If you're trading a daily chart, which is your input's going to be 3 days on the indicator. As long as you know the speed that you want to trade the instrument in minutes, it's going to be 3 times that in the indicator. That's really easy. This is a 3-minute. I inserted the 9-minute. That's all. So it's very simple. As long as you know what speed you want to trade on your trading chart. And it works great on Unirenko. That's what we're going to be using it on. That's what we trade on our chart. And if I go to a 4 Unirenko on Electronic Arts, let me just take off the drawing tools. And then I have to go to the indicator. Now Unirenko is a little trickier because you got to go to range, and a 4 Unirenko is a 21 range. But we'll show you all that. Don't worry about that. But here's Electronic Arts on a 4 Unirenko. So I don't think that was there when the trade evolved. I think that these are after the fact areas, and I want to find one that was already there. Let me just check the pivot sensitivity indicator. Let me check the sensitivity on it. No, it's at 150. That's right. Let me squeeze it. Now, that's a sell zone. It went right through it, and it's going to happen. See, here's a sell zone that was there after the fact, and you did have a small buy zone here, but that called this nice long trade, short trade. Now, if we look at this on the NQ, which is what we trade, let me just take off all the drawing tools. And I'm gonna, just answer your questions after this. Look at this great bottom it called at 1232, and look at that move. I mean, that's all you need. You need this one trade, and this went 44 points. I'll take a 144 point trade. Now this is really a trade. When this breaks a buy zone, you're in short, because it shows you there's enough selling power here to take out all the buyers here, and you can trade it once it stops tracing. Same here, only this one did not go very far. Actually, it went right here, and it did not go much. Here's the break of the buy zone and a gigantic move. Now it bounces off support. Break, a nice move down. Break, nice move down. Comes up to resistance and collapses. So it really does define price movement to a tremendous degree. Nothing is going to do it perfectly, but all this does is reduce the risk you take on a trade. And that's what every indicator is supposed to do. It's supposed to help you define risk. You don't want to trade up into a zone where there's an overabundance of sellers. If you do anything, you want to take the trade short. You don't want to trade long when there's an overabundance of buyers. When the buy zone breaks, that's when you can go short, and they do break. But I'm giving you a trade methodology, and I really don't want to do that. What I simply want to do is show you what the indicator does and how much it can help you in your trading. I mean, if you just simply do not trade short when there's an overabundance of buyers, and do not trade long when there's an overabundance of sellers, that alone will decrease the number of losers you take alone, just on that alone. Tom, I would show you Shopify. I love that stock. It's getting I think it's getting a little bit cream, but it's going so long. And I don't mean to exclude you, but I'm telling you, these all trade really well. Can I use this on my 4-unit Renko chart that I now use? Oh, absolutely, George, you can use it. All right, you know what, Tom? I'll just show you shop, okay? Because I'll show you Shopify. Now we're not going to trade it on a unit Renko. Wait for it to load. Let's take Shopify. I'll just pick a 2-minute. Well, I picked a 2-second. I don't think that works too well. Let's pick a 2-minute on Shopify. And let's go to the indicator and make sure it's set at 6 minutes. Minutes and 6. And on stocks, we dropped the sensitivity to 100. So here's Shopify. You know what? I'm going to swing all the way to the beginning, and let's take a look. Okay, now that was there after the fact for this short. And Shopify still in a funk. Now we've got support on Shopify, and you can see it's reacting. That indicator, whoops, this support zone was long there when price came down and halted right there and turned. Now it comes right back to support, and it's sitting on support. It breaks it, and there's your short trade. breaks it. I wouldn't trade between these two. Now, and you've got another one. When they're stacked like that, you just got to wait for one that's free and clear. Now here you can go short. You don't have this here yet, and you don't have that here yet. I mean, we want to make like the trades live, and we don't even have this here yet. But it does form, and when it does form, you're going to get out of the trade. There's one right up here. So you know you're not going long because you've got an overabundance of sellers there. Hits it and turns. See, it tries to get through it, but the sellers do not evacuate the position. There are not enough buyers. And look at that trade to the downside. It's still going down. And it hits support and you're out. Now it's just skimming support. You wait for the break of support and you take the trade short. Wait for the break of support and you take the trade short. And these are right on top of each other. Up you go. So you can see it really does define price direction. And with a little bit of screen time, you learn how to trade it really well. I mean, these are really relevant areas where there's an overabundance of sellers. These are really relevant areas where there are overabundance of buyers. Is price always going to respect it 100% of the time? No, because sometimes there's going to be a huge institutional move that's going to push right through these buyers and stop them all out. And when it does it, now that's the reason I just want to add why when this stops, you take the trade, because it means all these buyers are being stopped out. And as they're being stopped out, it's going to push the trade down. These buyers get stopped out, it pushes the trade down. These buyers get stopped out, it pushes the trade down. Now, finally, you hit support that holds, and up it goes. So I just want you to understand the rationale and the information it gives you. I can't show you. I do not have a crypto data feed, Fong. I don't. But I'm telling you, it doesn't trade any differently than stocks. I mean, it's just all buy, sell, imbalances. I'm telling you. I mean, believe me. I mean, if it works on stocks and it works on futures, there's no difference in cryptos. I mean, they have buy, sell, imbalances just like any other instrument, and it will work on them. It will help you define areas of support and resistance very accurately. And like I said, the reason is because it's a multi-time frame assessment. And it's easy to see. Right here, price went way above it. Not way above, but it didn't take it out. If it was just based on the chart time frame, this would vanish. But those sellers are still there on your two higher time frames. And price eventually sinks into the dust. I'll do one more, that's it. Everybody must be asleep by now. I'll do the E-mini because that's such an important instrument and so many people trade it. Let me just I have to fix the data series here. I have to go to first of all, I have to go to a 2-unit Renko. And then I have to change the data series because this is a 2, a 2, 3, 7, I believe. Unorenco. We change that. And then we've got to go here. And I'm sorry, we've got to go to the indicator. And we have to make that a 1. And we have to go to range. And we use an 8 range. And here are your areas on the E-mini. And let's take today. Now this move down created this line. It wasn't there before the fact. Rory said there's only 3 left for the first 10. If you want to come into 2 trading rooms for a month, only 3. Comes to support, and up she goes. Now you know that the E-mini today is going to take a blistering. This break does not go anywhere. It stops trading right here, and you could have taken that short, and you may have taken a loser. I mean, I don't want you to think that this indicator is never going to take a loser, but the loser is going to be small. Because once this stops tracing, you got to be out of the trade. Now, up you go. And it was here when this was there. Now you got your break. You have no, and down you go. Support, and up you go. Now this line may not have been here on this candle. It may have come on this candle. It may have come on this candle. I can't tell you. It comes really fast. Either way, you're going to get this long trade. So you see how well it defines price on a 2 Unorenco on the E-mini. Okay. Yes, Heinz, it is. It is. Damien, I don't know if I would hold till an opposite zone is created. You know, what I would do on the E-mini is I might take it off at 10 points. You know, what I would do is we'll give you suggested automatic trade management strategies because sometimes it just doesn't make it all the way. And I don't want you to be up 10 or 15 points and then come all the way down. The other thing that you can do that I really like is you can trail it on a reversal candle, or you can use a trailing stop. But as the move goes up, I would lock in profit so that if it's up 15 points and then comes back against you, you're gonna exit the trade, and you're gonna be up 12 points. So I you know, your assumption is you're going to move from areas of support to areas of resistance, but it just doesn't always do that because there are other factors involved, and this is one indicator. Trading off of support is going to give you a nice move up, but I would create on ATM, and we'll help you with that as to where to take off if you want to trade 2 contracts, where to take off the second, where to take off the other one. Will give you the targets. Well, that's what I'm saying, George. You need a predefined ATM. In other words, if you're trading the E-mini, we're gonna suggest to you. Let's say you're gonna trade 2 contracts. Your risk is low, potential reward is high. So you're gonna take your first target out at 5 points, your second target out at 10, or we'll talk to you about it. What you can do is you can take the trade on a trailing stop, on maybe a 6 or 7 tick trailer. So every time it moves up a tick, it drags the stop up, and you'll get a nice move. If it comes back and takes you out, you can either go right back in again if there's nothing above you and you think you can go, I would not. But you can lock in profit as the trade moves up. So if you get a 25-point move, you're gonna be able to capture 85 to 90% of that move, and it'll eventually take you out on the trailer. And that's what I would do. I mean, that's the most conservative approach. You'll get a recording, Jerry. You know what, Mike? We could do that in the future. And you know, if you come aboard, you'll get all updates automatically. And I'll talk to Sergio. What Mike was asking about was us putting arrows in for long and short, and that's a great idea. And quite frankly, I'll talk to Sergio about configuring that. And when we do that, if you have the indicator, we'll just add it on. And we always do that. That's our policy. The indicator comes with lifetime upgrades. So if we make the indicator better, you get it. James, we have plans to put it on the scanner. Okay? No, we do. I'm just going to go through the rest of the questions quickly because I'm running so far over time. It can be added to a scanner, Stephen, and we're going to add it to our scanner. We just need a little bit of time. We just developed it. So if you give us a little bit of time, we will put it in to the scanner. Okay. Yeah, Bitcoin, Heinz left, but Heinz has been in my room for like 4 or 5 years, and he put Bitcoin and ninjas available. If you have Coinbase, Fong, Sergio will do the whole setup for you. Then you got it. You're good to go. Yeah, Heinz says Bitcoin is BTC in CQG and tradable on NinjaTrade. And Heinz said he trades it. So, and I swear to you, Heinz has been in my trading room for about 5 years. Everything is recorded, Stephen. No problem, Mark. No problem. NT7 or NT8, Lynn, either one. Well, when you say a 500 tick chart, Robert, I don't know what you mean. Oh, 500 ticks. It's easy. What you do is you default to the nearest fib number. So the closest fib number to 500 is 610. And then you take the next highest fib. And I can't remember what it is, but it's going to be 377 plus 610 would be your next fib. So anytime if you're trading like a 6 range, you're going to default to 5, and you take the next higher, which is 8. So if you're in between, you just go to the nearest one and then take the next highest fib number. They're different, John, because they're using market delta as their assessment. They're not necessarily, you can see they're not using changes in direction on the chart. They change the direction on the chart, but they're not used. So if they were using that, you'd have a pivot right here. You have one right here, and you don't, because the market turned, but there was just no buy-sell imbalance here. That's how it's different. Yes, this could be a swing trading method on a 4-unit Renko. I just recommend you set up an ATM, George. That's all. Interdays swinging, or it depends on your time frame. If you want to trade a 4-hour, you can take it as a multi-day. Only I would not do that on futures, because something happens overnight, you get killed. It works on Thinkorswim, Tom. Thinkorswim has an API and we have a ton of traders on Thinkorswim, And what it does is it powers, you have to use Ninja. Unfortunately, you can't put it on Thinkorswim, but you can take your trades right off of Ninja Trader, and they will go right on your Thinkorswim into your TD Ameritrade account and broker, or they can, because basically what I'm trying to say is TD Ameritrade Thinkorswim will power this platform. You can take the trades off this platform or in your Thinkorswim platform, either one. But you do I think what you want to know is, you take this indicator and put it into Thinkorswim, and we can't. But you can power it. Download a demo, and with the API, your data feed will run it for free. So you never have to pay a dime for it. I mean, Thinkorswim is really good. George, I'm not going to do any more of them. I know you want the E-mini 5-minute, but honest to God, I have got to run, and it's running 40 minutes over. Trust me, it does not matter. You will trade really well. Let me go to the 5-minute. Now here's a 5-minute. I've got to come in here and change the indicator to a 15-minute. I got a minute, 15. Make sure the pivot sensitivity on futures is a 150. And here we are. Let's squeeze it. That was there because this candle formed it. This candle, it was still there right here. Now, based on your risk tolerance, still heading down. But you can see it defined a high right there. This one did not. This one did. But if you took a small loss here, you're going to get it back magnified. Let's see, because this is a long time frame. You're not going to get that many imbalances here. Right here, let's filter. This break is tradable, short, but it's not going very far. Now this long does define a bottom, and up it goes. It really doesn't make any difference. Now on a 5-minute, you're gonna have to experiment with this a little bit, but here's the down, it moves up, tests, comes right down. Move ups and tests, and comes right down. So it really does help you define price. And what you may want to experiment with a little bit is on that high of a time frame, you may want to make the sensitivity a little bit higher, so you get a few more areas. And that's something that you really have to work on. I mean, look at all this support. You would never take a trade into this. Here's where you have dual support, and this is a gimme trade right to resistance. Now on a 5-minute, now this is in the middle of the night, but it's still a valid trade. It's about an 8.5-point trade. And then it just blows right through resistance right here at 5:20, 5:30 in the morning. And then you get the test, down, test, and down. Tom, if you want to, we're going to send you a sign up for the indicator in about 15 minutes. And when you sign up, you automatically will get, on Monday morning, you'll get a password. You'll get emails for passwords to both trading rooms. My room starts at 9:30 in the morning. I get there around 9:25, and the other trading room is at 6 p.m. in the evening. It trades the Globex Open. And really it's a big discount because my room's $199 a month, and the evening room's $149 a month. So we're giving you the first month for free in both rooms, and we'll send you a link. Now we already got the 10, and because we got the 10, I'll extend it 5 more. So we'll go to the first 15. I mean, Rory just sent me a text. How I showed you it's $129. Here's the offer. That's the lifetime indicator. And I didn't type it in, but you always get upgrades. If we arrow it and signal it, you're going to get those. You're not going to give us another dime for this indicator. And we do all the configuration, everything. And the first 10, now I'm going to put the first 15 because we got the first 10 before I finished answering the questions. So you get a month in 2 live training rooms, my room and the evening room. And I'm telling you, I make good money. I did not have a down day this whole week. All I had was 5 winning days, and this was a rotten week to trade. I did not have a lot of volume, and I did not have a lot of volatility. But I showed you my back end of my Ninja Trader, and that don't lie. Rory did. He was here when I typed this out, Ronald. So he knows. Robert, I listen. I'm so over. I just can't do it. We'll be sending you a link. Robert Wright looks like it might be a must-have. Let me tell you, Robert, it's going to, even as important as it is to get you winners, it's going to be incredibly important to prevent losers. You are not going to trade 80% of the time. These zones are going to hold up, and if you trade into them, you're going to get smacked down with a loser. And trading off of them can be very, very lucrative and very successful. I lost my slide deck, but I'm just going to it's right here. I'm telling you, and there's still more requests for other time frames and stocks. But look, I could do this all day. Believe me, I put in enough to show you that it really does define areas of support and resistance. A couple of people are having trouble logging in, Rory. The offer right here, $129 for the indicator, lifetime. Any upgrades we do to it, you get those for free. Now it's the first 15 because we just got 10. Get two trading rooms. You get my trading room at 9:25 in the morning. We trade the NASDAQ and crude, and we usually beat it up. And this week I got good trades on crude, good trades on gold. I only took 3 losers all week. And I'm not going to bring over my Ninja Trader back end, but there are people in this webinar who are in my room who know that's true. And then we have an evening room run by David, and that starts at 6 p.m. in the evening, both Eastern time. One room is $199 a month, and the other one's $149 a month. So it's really a nice offer. It's a nice introductory offer, and the reason our price is so low is we believe that once you come aboard and see how well we trade, see how well the system works, you're going to stay with us, and you won't go anywhere. Okay, Raj. Do we get this if we have the full system already? Yes, James. We will send you everybody a link. So listen, thank you so much for your questions and your attention. I'll just tell you this: we don't release something unless we believe it, unless I know that it's going to work for you. And that's why listen. I just want you to know one thing. I could have prepared 25 JPEGs and just showing you the JPEGs. That's what 99% of these webinars are. And every time you saw it hit, it would be a perfect trade. I didn't want to do that. I didn't prepare one JPEG for this webinar. All I wanted to do was show you the indicator on the stocks or futures that you picked, on the time frames you picked, and show you a little bit about how to configure. That's what I wanted you to see. I don't want you to see the baloney, because I didn't make anything out of JPEG. I wanted you to see the indicator in action. So I hope to see you aboard. I hope to see you in my trading room Monday morning. I'm looking to make really good money. We want to make $4,000 this month, $1,000 a week on very small number of contracts. 2 on crude and all of those instruments, gold, 3 on the NQ is all we trade. A small number. I crossed 65 contracts this entire week. I think it was 61. Very small number of contracts. We take the plum trades, and you're going to see how well this indicator helps us trade. So listen, everyone, have a really, really great weekend, and hopefully I'll see you Monday. Bye-bye, everyone. I'm going to send out a recording.